Hello everyone and welcome back to another video. Here it is, my trading plan. Alright, so this I've been developing for the last 4 years, and it's what I found what that works best for me. And of course, it's just my way of looking at it. And you can have a totally different approach to trading, but this is what's been working out for me. Okay, so let's go over the trading plan. And I had I had one mentor from the beginning. I bought his course. I'm not gonna name any names, but I bought his course, and he was the one that taught me a lot. But I also chose to learn from other mentors and other people in the industry that had verified results and that I have been learning from months and years. So I don't take somebody from Instagram or YouTube and just look at what they're saying and just pick them as a mentor and listen to what they're saying. I study them. I look at them for months, and I do what is working for them. I just copy it, make it better, make it my version of it, and then of course see if I see any results. I continue doing that. If I don't see any results, I'll look for a different option. So I've been with this for since the beginning, actually for 4 years, and it has worked well for me. And the hardest part of this is keeping the consistency and keeping the discipline to follow the rules. And that is it. That's just it. If you follow it and have the discipline to stick to it, you will become, or I will become, very, very successful. Okay, so let's get it. I'll show you guys everything right now. So from the beginning, I always heard just trade one pair, focus and master one pair. Now, you can start with, let's just say, AUD USD, which is a super, super simple pair to trade. And I was trading it. I had my best day. I had, yeah, I think maybe two of the best days last year of 2025 was on Australian dollar with US dollar. The main reason was I was right on the direction. It moved well. It was a swing trade, and I had everything correct. So risk management was correct, and I just had the best trade. It's very simple. Now, another one, of course, is gold, right? I would put this on a second tier to trading. It is not simple, it is not easy, but it is, if you study it and you stick to it, it's very well. It will give you very good results as well. Now, next to it would be US 30, of course. This is Dow Jones, very volatile. I feel like it's harder to trade, and you need, in my opinion, more capital to trade it. Okay, and of course, you need the right knowledge for all of these pairs, and don't treat it as just a regular pair because they all have their own personalities. Okay, so going back, main pair that I chose since the beginning was gold. I just loved gold. I feel like I got a very good understanding of it. Now, gold changed a lot from the beginning. Okay, so it changed its personality from the beginning, from 4 years ago to now. And of course, 4 years ago, this was around 1100. 11, yeah, this was like not 1100. This was like less than $2,000, and now we're at 4,000. Of course, from this drop, but we reached a high of 5,600. Okay, so the main pair that I had chosen again was the gold, XAU USD. And then next up is the time frames and direction. So what I have found was, I always start looking at the chart. Let's just say if I'm analyzing on the weekend when market is closed, or even during the week, I just start from higher time frames. So I don't go to the monthly too much unless I'm looking at stocks. But if I'm looking at day trade, I'll just go for the weekly, see how the weekly closed, and the daily. If I'm looking at better for a better direction on the market, I'll drop down to the 4 hour. So right here, right now, you can see we had this high, and then after that, it has just been going on a bearish trend. All right. From this, I look at if I'm breaking it down. So the direction, the trend, daily, 4 hour, and for specific entries, I'll drop down to the 1 hour, 1 hour time frame, 30 minutes time frame, even 15 minutes. Sometimes, if I'm really looking to get a specific entry on a trade, I'll drop down to the 5. Now, rarely I'll go for the 1 minute because it's too volatile. Every 1 minute is one candle, so I'm not gonna be, looking at something like this, a bullish engulfing candle, thinking is a buy, and then on a 5 minute is another candle because it's too volatile. Okay, and then now I have important elements for buy. So what I look for when I'm entering in the buy, okay, when I'm clicking the buy button. Now, first off is support or demand. So right here, I'll just give an example. Demand is where price is basically just going to collect a bunch of orders in a level of support. Okay, so level of support means I'm hitting it from like a floor, right? The floor, this is the floor of imaginary floor, and I'm hitting it multiple times like this. Now, it's called demand, and then I'm looking for buys this area. So this right here will be the good example. I had multiple touches right here, 1, 2, and then another touch right here. Now this is the 5 minute. Again, I'm rarely entering on a lower time frame, but I'm just showing you guys as an example. I have 1, 2, 3 touches, so this is a created level of demand right here, and this is where you should be entering for a buy. Now another one would be for me above the moving average. So as an example, again right here, if I'm trading above the moving average, for me is a buy. So we're above this blue line right here is a buy. So this right here is a great example. We are basically respecting the moving average right here, and price just shoots up right here again one more time above it, again right here one more time above it. If we are below, so right now we're below right here, is going down, down. Okay, so that is the second one. First one is support or demand above moving average, and then next I'm looking for basically a type of setup. So we have break and retest, trend pullback, or liquidity sweep. Okay, so this right here would have been a liquidity sweep right here. We have this level of support. Price just pulls back, collects some orders, takes out the buyers from here. This is the liquidity sweep, and then we shoot up, making new highs, breaking this area right here. Break and retest will be something like this. Let me look for it. Maybe right here. We have this area right here that's rejecting, right? Coming down. And then we have this break of this area on the left, and then we have the retest on it, and then price just goes higher. Okay, you can see if I find another great example on it. All right, here is an example, right? We have this low, we have this break above it, retest, goes higher. That's one. Or a trend pullback if we are going long. Let's just say right here we went long, a pullback, entry, move higher. Okay, so we have a lot of setups, a lot of different setups. So another thing will be candle confirmation. I like to go for uh, strong engulfing candle. Again, preferably on a higher time frame. So this right here would have been a good uh, confirmation for buys, which is a strong doji candle. This means a lot of buyers are entering the market. This was previously a bearish candle, so it rode all the way down over here. Buyers entered the market, boom, price push higher, and then we have a candlestick pattern right here as well. We have 1, 2, 3 doji, and then a bullish right here engulfing as well. So that's the 1, 2, 3, fourth thing that I'll be looking at, and then of course trend, time frame, and trend confluence. So if I'm looking at this right here, which is on the 1 hour, and price is basically making lower lows, lower highs, lower lows, lower highs. I'm looking at the confluence for same as the 30-minute. If I have what I'm looking at, the 30-minute, we are confirming, we are making lower lows, lower highs. Right here, you have, another low right here, making lower lows. If I go to the 4 hour, it's basically doing the same thing. We're below the moving average, as I said. We're making candle confirmations, boom, engulfing candle on the left. All of that is showing me that the direction is correct, that I should be going for sells rather than buys. All right, and then the most important of all is risk to reward. So if my risk to reward, I corrected it from time to time, and I just had my best day last week on Wednesday. It was best day of the month, and I followed by 3 losing days. So Thursday, Friday, and Sunday was losing days for me because of risk management. What I found best and what I think would work good for everyone would be, if I'm dropping down to the 15-minute here, I'll give you guys an example. If I'm looking at, let's just say like this, boom, 1, 2, 3 candles, hold support, this one right here, and then this one closed higher, basically confirming this level of support, and I just enter here. I have found that if I can do a 12 or max, sometimes 15 point stop, and then of course, target would be break of the highs. Something less than, so let me write this down. Stop loss will be less than 20 points. I mean, like 10 to 12 points is great. 15 to 20 is okay. This is what I found for the stops. All right, I don't want to put a 30 or 40 point stop, because if I get stopped out from here, it's just not worth. Let's just say this is 18, I'll probably enter with a small lot size for this. All right, if I see the trade coming back here, if I can do 15 is okay. If I can do 10 to 12 is great. Now take profit. So for take profit, of course, more than stop loss is ideal. If I can do take profit from, if I'm doing 10 to 12 point stop loss, if I can do 12 to 24 is great. And then 24 to even 50 is awesome. If I can do that, is amazing for my stops. Okay. And of course, if I can have a TP that's a runner, is just amazing. I don't know. Yeah, just amazing. Just you need it. Is the goal, right? Is the goal. If I have a runner is the goal, because if I have the right direction of the market, so let's just say I entered that trade over here, above here, and then I have a 15. Oh, this is so enter right here. If I have a 15 stop and I close, take profit 1 for 15, it would be about 30 points for a 1 to 2. So this is TP1. And then be just say no, go back. 45 would be 1 to 3. TP2. Then of course you have the runner. That would be amazing for 100 points, right? So I have a 1 to 7, and I also close right here TP1, TP2, and then the runner, and of course moving stop loss to break even will be amazing. Now here's the final rule for going long or even going short is 2 losses in a row. So 2 losses that I have 10 to 12 points, 2 losses, 2 L's in a 2 losses equals stop trading. This is simpler. 2 L's, I stop trading. All right, that's it, done for the day. See you guys tomorrow. And then no setup, no trades as well. So no setup equals no trades. This is the system. Now, this is, of course, I just talked more about buys. If I'm going for sells, it would be a resistance or a supply. So resistance is a level that is pretty much the ceiling, right? So right here, let's give an example here, the ceiling. So it had rejected, boom, once, twice. If I go again, it'll probably reject again. This is the ceiling, is rejecting from the top. That would be a supply zone or resistance. If I'm looking, next thing would be below moving average. So if we're going below moving average, I'll be looking for sells. And same setups, break and retest, trend pullback, liquidity sweep. So right now, below the moving average on a 5-minute. Again, I'd rather go for the 1 hour, see what's happening. On the 1 hour here, we have bearish doji right here, and we're rejecting from it. So it'll probably come down, make a small pullback all the way down here. I don't know, we'll see. Candlestick confirmation, again, maybe strong engulfing candle like this, maybe a doji, and then you have a bunch of other patterns, right? Risk to reward is the same thing for the sells. I want to be looking at a stop loss that I have less than 20 points. 10 to 12 is great. So as an example right here, if I had, I don't know, this, you have high, higher low, higher high, higher low right here. We made a new high, and then we just made right here a low. So lower high from here, right? Lower high, and then after this, I want to, let's just say if I were looking for a sell, we have bearish engulfing candle right here, enter for the sell. Let's just see, look, we have, we can do 12 right here. Ideal would be above this high, so 20. And then if we look at, we're going, this is a 1 to 2 basically. 1 to 2 would be 40 points. 20, like I said, is a high stop. If I can get a little bit tighter, would be better. But since we have, let's just say, we'll do here like 10, yeah, above. So we can do above this candle high right here. That would be crazy. 7 points is amazing. And then of course if I have a 40-point stop loss, it'll be a 1 to 5. That is ideal for this. And then same thing, take profit more than the stop loss is ideal. So more than 7 for this occasion on a sell is amazing. If I had let this runner go, it would be 30 points. And of course, I'll close TP1, TP2, and then have a runner. For sells, again, 2 stop loss, no trading, no setup, no trades. Okay, so this is it. Cop this watch, this cap, this hat as limited edition. Okay, so this is it, guys. This is pretty much my system and what I look for when I'm taking a trade. Pretty simple, pretty self-explanatory, and yeah, it's working. All right, see you guys on the next video.